Lee Baker is the owner and president of Apex Financial. He joins us alongside Eaton Vance portfolio manager Yana Barton. Good morning to you both. Yana, I'll start with you. The weakness we are seeing in tech right now, and certainly we're seeing that as we have seen yields in the bond market move higher in recent days. Is this an expected or healthy pullback right now, or is this, I guess, a warning sign that of something steeper in terms of a correction?
Good morning, Morgan. I think it's a healthy pullback in various pockets of the market. I think it's a reminder that higher growth opportunities don't come without risk. A few statistics for your viewers. The information technology sector in any given year experiences about a 15% drawdown. That is from peak to trough, and we're about 6 to 7%. And for context, last year we saw an average stock decline 39%. So higher growth opportunities are certainly much more volatile. But I think longer term, tech remains a place you want to be because secular tailwinds are not going away. Jim Cramer just mentioned SolarWinds attacks, cybersecurity, infrastructure plays. All of those are within tech. But investors need to think outside the IT sector box and go to other areas of the market that allow them to play these tailwinds, like industrials, like healthcare, like consumer. So lots of opportunities for investors seeking growth.
Yeah, that's a key point right there. And Lee, I want to get your thoughts on it because, I mean, not all tech is the same, right? So I guess, how are you seeing this pullback? Is it presenting buying opportunities? And would you see those within IT, or would you see those in some of the other sectors where we have seen this digitization of everything take effect?
Yeah, so I think it does present an opportunity, but I think it requires you being selective so that you don't get enamored with the IT sector broadly, because I think there's a huge difference between the Microsofts and the Apples of the world. Those types of companies, I absolutely think this is a buying opportunity because long term, I think we're still going to see them be the major players and continue to grow. There's some other names, perhaps not so much. So, you know, if we're looking at the NASDAQ and the tech sector, I think we can experience a bit of a bifurcated market for a while. But I absolutely agree that this presents a buying opportunity, just perhaps requires to be a little bit more selective than some other times.
Yeah. Meantime, Yana, I'm curious how much weight you're putting on comments from Fed Chair Powell today. Certainly, he's in the spotlight, given the fact that he's going to be speaking at noon. The moves we have seen in the bond market and thus the equities market as well. To talk about things like Operation Twist that could be coming in the next couple of weeks. Do you think that is a possibility, or do you think that it's being overblown right now?
Well, it's very, very difficult to gauge what will happen, but we're certainly watching all the macro inputs that you mentioned, 10-year treasuries being the most important one. I think if folks are worried about rising rates, rising inflation, again, the information technology space has shown historically to be a really great hedge against that because of the pricing power that comes from innovation and disruption that allows for folks to recognize the opportunity. I also think that the point of an average stocks return is a really important one. While the NASDAQ is flat to slightly down, there are over 70% of its constituent space that is outperforming the NASDAQ composite. An average stock in the S&P 500 is actually outperforming the broader market by almost 500 basis points. It's up about 7 percentage points. So this notion of being a stock picker, this is the time. You've got dispersions running high, meaning the return spreads between best and worst. This is the time to really pick your spots. And I think over the long term, you'll do well.
Shepard Smith here. Thanks for watching CNBC on YouTube.